everybody, and welcome to the introduction of the course. Now, if you've been here a while and you've been with us through the making of this course, you understand that my ringer is always on when I start recording. But another thing you'll understand is that we've had a course intro before, and it is December 28th, and I am watching all the footage back before the final release of all of the course material and the product. And I'm watching the intro, and I just gotta say, to sell a product, you have to be emotional about it. You have to be happy. You have to pull in the customer, right? Watching that intro hurts. That's a terrible introduction video. It is awful. The quality is terrible. The quality is probably gonna be the same on this video. Who really cares though? I'm gonna remake that video. I'm gonna be a little bit more descriptive. I'm gonna be a little bit clearer. I'm really gonna put some more emotion into it because I've made the whole course now. I'm completely done. I'm happy about it. The product's finished. I've gotten good feedback for what they were given, and then I'm excited. So, a quick introduction to the course is what we go over, right? We go over ICT concepts, we go over market psychology, and we go over technical analysis. Now, what are all these, right? ICT concepts are more of our candle patterns and structures and how those can help us enter and exit trades. Market psychology kind of dives into the emotional side of the market, how to deal with your gains, how to deal with your losses. Some of the emotions that we want to have in the market are discipline, our patience, all that. And of course, our technical analysis, which is our key structure, our key levels, how to read big candlesticks, where to find key levels, support versus resistance. We'll talk about all those concepts, and we talked about them all in depth. In total, the course is about 14 and a half hours of runtime. We cover everything from the initial basics of what everything is to how I format a trade based off my personal strategy. And we bring you through a full live trading demonstration of my strategy intraday. So, I believe that's episode 14, 15? I don't know. I kind of lost count. I'm not really looking at it on my second screen either. First, we'll get into talking about my personal experience. I've been a trader for 4 years. I'm going on a 5-year trading journey in 2026. And with that 4 years of experience, I paper traded for about, I'd say 5 to 8 months, anywhere within that time span. I know it's a pretty large time span, but anywhere's within there. And that just helped me learn market movement, price action. It really gave me a deep understanding on how the market moves and what you can really do, right? I'm trying to save you guys that little extra time paper trading with the knowledge that I'm trying to give you in this course, right? I would still suggest that you paper trade just to learn how your market flows, how price action, how you trade personally based on, the market and how it moves. I would definitely try it out with fake money before I would move into doing it with real money. Getting right into the whole money standpoint, I'm not a funded trader. I'm a live options trader. I also buy shares, and I'm a long-term investor. I haven't dabbled in any funded futures yet. In 2026, I would like to. It's definitely a goal of mine, but I'm not jumping onto it at any point. My trading is for long-term. It's more for my credit leverage and my, I'd say long-term wealth, right? Most of my gains go right back into investment funds, and I can't touch those until they mature, basically when I retire. And what that does is that I trade for retirement. I want to retire early. I want to live in Miami. I want to play golf every fucking day, right? I don't want to be stuck at a job or be stuck at the charts all my life, Payout money is definitely nice when it comes to funded, but I have no need for it. I work 40, oh my God. I work 40 to 50 hours a week at my job. I'm fully employed. Trading is more of a side hustle to me, but I do take it pretty serious. I am lucky that the job that I have allows me to kind of split my focus from my actual work to my trading. It's very beneficial that I have a job that allows me to do that. And some of you are asking, maybe what field do I work in? And I can't tell you fully where I work or what I do, but Definitely, I would say the manufacturing field has a lot more gimme room for kind of sitting on your ass and doing nothing on your phone. But that's besides the point. That's not what I do for a living, okay? Um, my trading knowledge is very new. I've lived through, let's say, I'll say the Biden presidency and the Trump presidency, and both of those had very different price action. Obviously, if I go to a monthly chart, this year has been incredible based on the Trump presidency. We could see that, back in January when he was inaugurated, we fell from all-time highs pretty deep with the tariffs, and we've been on a recovery effort ever since, smashing new highs pretty much every month. It is insane to think that I went from a Biden market, which really didn't move all that much. You know, I remember when I would be trading and I would try to get, maybe like a 30-point move within a day, and it would be impossible, right? Closing a gap that was more than 20 points was impossible in a day. But with Trump's market, it has been volatile. It has been juicy for trades. It has been great this year. I have made a great sum of money, and now uh, I'm still going to be trading full time. Well, not full time, but I'm still going to be trading a lot. But now I want to kind of move my money into bigger ventures, right? And that's what this course is. It's kind of a test to see what can I do with my time that isn't trading or working, right? So I give this knowledge out, not for free, but at a reasonable price. And I want you guys to really take this knowledge, right? This is for the younger generation. This is something that we were never taught in school. This is something that not a lot of people have a good amount of knowledge on. Um, I would say that the younger generation is definitely the target of this community. I would say that I want to build a community for the younger generation. We have a lot of information about uh, long-term goals in investing, and it's not even that I want to stay on the investment front. I definitely want to start making videos about how credit works, how mortgages work, how tax benefits can be implemented into every person's tax return. These are all things that really just cover the financial scope. With a lot of young kids, we don't have that knowledge. We were never taught that in school. It's not a forced upon point. What you're seeing, and I'm going to get political, kind of geopolitical for a second, but what you're seeing with this younger generation is the lack of the lack of work ethic, the lack of knowledge for the future, and the lack of drive. And basically what I'm trying to do with this course is kind of edge everybody into that, right? We're going to start with investing, and then we're going to move on to bigger things. Now, I'm going to tell you that if you're investing the way I do, get a job first. Build a work ethic. I mean, I'm not going to tell you that you have to go to a brand new corporation and, work 40 hours a week, but go get a part-time job at McDonald's or something. Something that makes you want to get up in the morning and go to work, right? I don't do this for fun. This isn't fun for me. This is work. And that's how I'm going to carry this course, right? I really want to expand everyone's knowledge on the financial scope. I want everyone to really understand how this all plays into our lives, because we don't understand the importance of this just yet, right? The older generation has kind of pulled the rug out from the younger generation when it comes to buying things and building wealth and maintaining that wealth. So what this course is it's not a cash grab for me at all. It's more of a gateway to an expansive knowledge of financial advice, right? And I'm not a professional. This is not professional advice. This is based off of my learnings, my experience, and my research, right? I mean, I can tell you that most of this course comes from this book right here, and I have page and page. Of course, this is the book of the year right now, but I have page and page of notes, not just on the course, but on, credit cards, how credit score affects you, how mortgages work, the scripts to these courses, right? Now we'll get into some basic terminology, some basic things that we look out for, basic things that we trade. We'll talk about all that. So first off, we'll talk about what is a share. Now, a share is a stake in a company that you can own. Now, each share has its individual price. Let's say if I were to go to, Coinbase, right? Each share is $236.90, right? So if I would buy 10 shares, that would be around, 2.3, I lied. If I were to buy 10 shares, it would be 23,000. I think I'm doing the math right. I don't really know. Um, Singular shares and long-term investments generally have the best return rate, and they're the safest investment because you can hold them forever, right? Um, you know, Investing at certain points with shares is sometimes better than investing with options. You can sell at any point. I know that if I go to American Airlines, I can show you a recent trade that I took with shares. Right? No, this is not. I want to go to American Airlines. And if we see here, right, I took the hold above 14. I bought at $14, right? Caught this whole uptrend. I sold some at 16, and I'm holding some more shares just in case it keeps running, right? This is a daily chart, so obviously it took a little bit longer on the weekly time scale. You can see that it was about a 3-week, 4-week trade. And you can see that we are at the bottom end of this completely. This is horrific, This is a horrific chart. The reason I'm trading this is because it has relative strength coming out of the shutdown and all that, but we'll see, right? That's just a little bit. There's also such things that involve shares like indexes, right? Where it's a conglomerate of a bunch of other stocks together, or it's a sector, right? So XLF, XLK, there's some other ones. If I go to my sectors, these are all indexes. The semiconductor index, the bond market index, the communication index, real estate index, utilities index, materials index, industrial side index, healthcare index, technology index, and financial index, right? These are all sectors of the market that each hold different stocks, right? Your semiconductors is your NVIDIA, your Palantir, your SoFi. Your real estate is your OpenAI, maybe, or not OpenAI, your Open Door. I know they're a real estate company. Your materials, gold. Nope, that might be metals. That would be metals. Maybe materials. I don't know, but materials are like your steel, your iron, your domestic product. Financials, your banks, J.P. Morgan, Goldman Sachs. Healthcare, your Eli Lilly, your United Healthcare, Pfizer, all of those are in there. These are sectors of the market that we look at on a weekly basis for our analysis to see what sectors are pulling, what sectors are leading, all that, right? Going back to indexes, right? I'd say there are 3 main indexes, mostly 2 because the third one most doesn't really get a lot of volume, but we have the NASDAQ 100, the S&P 500, and the Russell 2000. Now, what do all those mean, right? Each broad market index has 3 components. The broad market indicator, the index level, and the futures level, right? So for the NASDAQ, you have the NASDAQ 100 to watch, right? You have the QQQ, which is the index side, and then you have the NQ, which is the futures. For the S&P 500, you have the SPX for the broad market, you have the SPY for the index, and you have the ES for the futures. For the Russell, I think it's the Russell 2000, the broad market. I believe it's IWM on the index side, and then it's the Russ on the futures side. I'm not too sure about that third group, but each of these indexes are a broad market indicator, right? So the Nasdaq is the top 100 companies in the market. It's mostly tech weighted, but that's besides the point, right? The S&P is a little more diverse with the sense of it has the top 500 companies. And the Russell is mostly referred to as the small cap index because they're the smaller companies, but they're still up there high in the food chain, right? That's, I think, the top 2,000, I think. I don't really know. I think it's the top 2,000. That would make sense, right? And then you have, your volatility indexes and your bond market indexes and all that other stuff. And your materials, like your gold and silver indexes, those exist as well. There's another type of stock. It's called an IPO. That is an initial public offering. If you've watched The Wolf of Wall Street, right, you all know it. Um, that is the opportunity to be offered a stock before it goes public, and you can buy in and hope that it goes good. You know, if I had to, let's go to Fly because that's recently IPO'd this year, and I just invested into it. So it's an aerospace company, and I've been watching it for a little bit. We'll go to a 4-hour chart. Now, this IPO'd back in 807. Am I stupid? Yeah, no, it was this year. No, it was not. No, am I stupid? Maybe it was this year. It had to be this year. Yes, okay, so, sorry. Fly IPO'd in September, August, August 9th, right? Now, I'm sure people bought in at the IPO price of probably $60 or maybe even $57. Obviously, it was a failed IPO. It lost a lot of value. Obviously, not a lot of people buying. It's just kind of selling off. Some other inferences of IPOs this year: Klarna, Circle. I'm trying to think. Bullish was one. Can't really think of many others. But besides the point, Fly is one that I've recently gotten into. I bought down at, I believe, $20 a share, and we had a little uptick, and now we're getting a little pullback, which is fine. I'm a long-term holder in this for sure. This is a great aviation company, and I can see it getting some military contracts very soon. So this is a good buy in my case, saying that we have some major retracements to make off of all of this breakdown structure. But IPOs are a great way to get in early and lock in profits really quickly, but holding them for a long period of time can, kind of devalue it. I'll say Circle is a good one. I believe it's a crypto holding company, and I bought this IPO down at 50, or I believe it was 60 or 70 or something like that, right? Great IPO. I sold a lot of shares early on. I took the hit on the you need to hold until the mature period. Who cares in that case? Great IPO, really a lot of hype behind it. This was one of the first ones, I believe, took a lot of profits out. And then ever since that, kind of just absolute rip down. And recently the mature date struck in December, and you can see, really hasn't been doing anything. It's been a watch for me for a little bit. Obviously, I've been watching to buy in for some shares because, I could see this going the distance, but time will tell, right? Now we'll get into some options. I'm not gonna look on this chart though. I'm gonna go to SPY. Okay, we're on SPY. We'll go to the hourly. Turn off night because I hate it. All right, so options, right? Whoa, what are we looking at, right? Everyone's going to freak out as soon as I click on this. To explain options, right? Options are contracts on a stock promising you a sale of 100 shares at a specific strike price, right? Now, it's different than futures as you're not locked in to take this sale. You pay a premium, and that premium fluctuates based on the value of the contract, right? You're not buying 100 shares and hoping the stock goes up and risking all your capital. No, no, no. That's a future. We don't do those here. We do options. Option premium is based off of how the stock moves. That would be volatility and how much risk, right? Let me rephrase that. Options pricing within the market are based off of volatility and how the stock moves, right? When we as traders go to buy options, we are looking for a good risk to reward and a cheap premium, right? We don't want to be paying a lot to risk, or we don't want to risk a lot to make a little. We want to risk a little to make a lot, right? There's also selling options, which are a little more expensive. However, they're a little better for passive income traders, and you're still just working with that premium price, right? You're just paying more to sell it than you are to buy it. Um, when we look at this chart, obviously we're going to get into the details at some point. We talk about all the Greeks and we talk about what all of these mean, but in short, what we'll talk about is you have I'll close this, you have an expiration date, which is 1 day, 2 day, 3 day, you can buy them a week out, a month out, a year out. Basically, it's an expiration for our contract, right? There's 0 DTEs too, but those have the risk of theta. We'll talk about that in a second. Your bid and your ask price have to do with what you're doing with the contract, right? Your bid is your buy, your ask is your sell, right? So if we were buying a $676 strike price contract 1 day till expiration, we'd be buying it for about, if we go to the mid price, we'd be buying it for about $1,430, right? And I say that weird, sorry. $1,430, that's better, right? That's the mid price. Between the ask and the bid, right? Your implied volatility is how violent your contracts are going to move. I don't know what the incremental value is there, but I know that plays a pretty big role. And then if we scroll, we have our Greeks, which is our delta, gamma, and theta, and vega, right? Your delta is your direction, right? So if we take a contract and the trade starts moving in our direction, which would be in the profitability zone, our delta will go up. This is profitable, right? Time, which is more of our theta, right? The longer you hold the contract, the more it loses value. And your vega, which is your volatility. And that is also hand in hand with your implied volatility, right? So now, to wrap up this video, we're going to talk about some things that we should be trading versus what we shouldn't be trading. Of course, there are many stocks out there to trade, but some get more hype and volume than the others. So what I like to do is I stick to my core list, and what that is it's in front of you. It's NVIDIA, Apple, AMD, Amazon, Costco, CoreWeave, Google, Robinhood, JP Morgan, Meta, Microsoft, Palantir, SoFi, Tesla, and missing one. United Healthcare. That's it, right? This is the heat map, obviously, but if we want to go to the watch list, here are all the ticker symbols. Use them as needed. I like looking at these stocks personally, simply because they move the market, they're relevant, they always have volume, they're always talked about. It's always news headlines talking about them. All of these companies are high up on our list of our S&P index and our NASDAQ index. We watch these stocks simply because these get a lot of volume and they move nicely, right? We can find better moves here. Of course, when you are trading, you do want to stick to one index, either NQ, ES, or if you're really feeling bold, go to the Russell. But on top of having a singular index and watching your core list, right, it's good to have an eye on your sectors as well, right? We talked about this a little earlier in the video, but having an eye on the sectors really tells you where the market's moving, what's strong, what's weak, all that other things, right? On top of it, it's always good to have an eyeing watch list, right? Things that you're not invested in yet, but you're looking at. I remember we were talking about Circle. I believe Circle's somewhere in here. I'm not going to look exactly for it, but it's down at the bottom right here. Circle's one of my eyeing stocks, so I'll keep it in here. Basically, it's just keeping yourself organized, right? I don't have a huge eyeing stock. I have, 56 that I'm looking at. These aren't things that I'm looking at on the daily, but, if I see a headline, I'll take a look at it, and maybe there's a good move off the initial move of a headline, right? You just want to keep yourself organized and not overwhelmed, right? You want to keep trading things that you know, things that you like, things that move, right? And that's what our core list is. I'm not going to take options on these stocks simply because, it's a good entry point. No. These are more of shares, maybe an option move, maybe something short term, maybe something long term. it all depends on what the stock is doing. And, with our core list, it's easier to, yes, buy shares off of pullbacks. Yes, trade options off of moves, right? Because each of these have phenomenal moves on the inside. I know Tesla is a recent one that I've taken. If we go to a daily chart here, and I'll turn on my drawings. I'll go to a 4-hour actually. As you can see, I caught this break on Friday, the hold of 440 off the retest of this gap, right? And what had happened? We went straight up. Now I sold right at 480.75, which in hindsight is stupid because I had 475 contracts and they expired in like 2000 at like 2200, and I bought in at $360. I sold at, I believe, $800 and something, and they closed that week at like $2,200, which is stupid expensive, but I missed out on that, which is okay. But this is kind of the swings that I'm talking about, right? This was a good move to catch on Tesla. I know if we go to a daily chart, this consolidation range down here, about a month worth, 3 months worth of consolidation. I bought shares all through this, and I've been rewarded so far, right? That's a fantastic move, right? So it's just keeping yourself organized and not overwhelmed with too many stocks, right? So I'm going to say that about does it for the intro. I hope that this is a little bit better than the first one we made. Obviously, I got a little more in depth. It's a little bit longer. It's a little bit better. I have a little more energy because the course is done, so I don't have to worry about filming everything, right? All I have to do is film the live trading demo tomorrow morning when the market opens, right? So thank you very much for your time and listening. I hope you had a Merry Christmas, and I hope you have a great New Year. Here's to the course release. Keep on a lookout for that, and thank you for listening.